Good morning, everybody. This is the live market open for Wednesday, November 23rd. Hope you can hear me well. Back to my home office. I'm Yohay, Elam, Forex Crunch and Market Movies podcast, doing the show as usual for FX Street. As usual, we'll cover recent developments in markets, discuss various charts and levels, the upcoming events today and the next few days, our currency of the week. We'll focus on pound dollar. Of course, we'll talk about the week ahead, which is much busier, and we'll wrap up the show. So good morning, everybody. Of course, most important part, I guess, is your questions. If you cannot see the chat box alongside the screen, please go to the address here, klk.io/fxstreet-forex-live-video. So what's going on in markets? Markets are a bit more mixed. Okay, we've seen a big dollar rally, but after that dollar rally, things are becoming a bit more stable. Okay, so volatility is a bit lower than we were used to. I would say that now the dollar is taking some kind of a breather. Okay, the dollar is not as strong as it was just a few days ago. Despite a lot of uncertainty, which should cause volatility, there is some uncertainty about the transition of Donald Trump. Remember, it's the big event that moved markets, eventually triggered this big dollar rally. But it's uncertain if what's going on with that. We don't know who's going to be the Treasury Secretary. We don't know what kind of fiscal stimulus we're going to have there. We don't know many things. Of course, there's still time. The inauguration is in 2 months, but markets rallied on the expectation of fiscal stimulus, and we don't really know what shape that's going to look like. Okay. Other things on our agenda are uncertainty about OPEC, but higher hopes that there will be some kind of a deal. Saudi Arabia really wants to reach a deal, is ready to make concessions. It's unclear what Iran and Iraq, how much these countries will cut oil production, and Russia has not yet been invited to the talks in Vienna. The OPEC meeting officially is on November 30th. That's next week, but there are talks in the background between technical teams and politicians all the time. Lots of headlines coming out. I'm mentioning OPEC not only because it moves the Canadian dollar, but because it there's an inverse correlation between the U.S. dollar and oil prices. Good morning, GM. It says we want volatility and blood in markets. Yeah. Well, hopefully not really blood, but we need volatility. We had lots of good moves thanks to the U.S. elections, before the elections, of course, afterwards. We have some stability now. One of the reasons for stability is, of course, the Thanksgiving holiday tomorrow, and also practically Friday in the United States. I think things will get much busier afterwards. But today we have the Fed's meeting minutes. Now the Fed is nearing a hike. Very few doubts, chances are very high. Let me see if I can show you the chances according to bond markets. So let's refresh this. Last time I looked, it was 93.5%. Okay, very high chances. Janet Yellen, the chair of the Federal Reserve, had an appearance last week in Congress, and she said that the time it may become appropriate to raise rates relatively soon. Okay. So this is sort of the smoking gun. Today we'll get the meeting minutes from the November decision. The November decision was just the beginning of the month. That will probably once again tell us that they're going to raise rates again. Remember that when they raised rates for the first time back in December 2015, last year, they had the dot plot showing 4 rate hikes. Eventually we will get only one, assuming they will raise rates. Only a terrible non-farm payrolls next week can prevent it. Okay. Another central banker which talked quite a few times is Mario Draghi. He sounded quite dovish. He said there's still a need for more monetary stimulus, more monetary support, more QE. We don't know exactly what he'll do. Again, December is a big month for both the Federal Reserve and the bank, the Central European Central Bank. Can everybody see me and hear me? Blackout here. Am I talking to myself? No. Yeah. No, I see. Okay, everything's fine. Just a second. See a few comments here. Just a moment. Okay, everything's okay. Hope not experiencing any issues. You hear me? Okay. So another comment by Jim. Markets given so much time to make adjustments that if rates not raised, it will really rally. Yeah, the expectations at the moment are so high that it'll really be a shocker if they don't raise rates. The markets are already focusing on the next move. Means what will the Fed do in 2017? But that depends a lot on Trump, a lot on fiscal policy, a lot on the data about the U.S. economy. So we don't really know at this point. Okay. All right. Ed, good to see you, Ed. Let's continue. In terms of data, we had quite a few data points, mostly last week. This week has been a bit more shallow in terms of data points. We had the producer prices disappointing a bit. Also, consumer prices, core CPI dropped from 2.2 to 2.1 year over year. A small slide, small disappointment. But remember, this is around the Fed's target of 2%, so it's okay. In Europe, it's only 0.8, for example. In the UK, 1.4, 1.5. I think it's a bit. The US still has some kind of a lead over there. Anyway, other figures in the United States, building permits came out better than expected, so did housing starts. And this week's US existing home sales also beat expectations, so the housing sector is a-okay. Trump is a builder. He gets an economy that is building. Okay. Anyway, those are the positive data points. Well, not all positive, but mostly. In the United Kingdom, the unemployment rate for September fell, but jobless claims for October are rising. So there's some question: did UK employment reach a top, or unemployment reach a bottom? Are things beginning to worsen now in the UK? That's an open question. Currently, most market participants are not fearing that. It's mostly what will the government do, what's going on with Brexit, what will the Bank of England do. Eurozone inflation is still stuck, as I mentioned before, 0.5 on the headline, 0.8 on the core. That implies more monetary help from the ECB. In the UK, again, things might be getting worse, but at least for now, things look good in the UK economy. We'll focus on that later on. Retail sales jumped. In Australia, we're seeing the Aussie. We'll soon look at the charts. We're seeing the Aussie slide. One of the reasons is a poor jobs report in the land down under. And also another commodity currency, the Canadian dollar, is also suffering from not so good domestic data. CPI and retail sales have also seen small misses. On the other hand, oil prices are higher. So we'll show you soon the Canadian dollar, which is not doing so shabby. Today we have, as we speak now, we have Eurozone PMIs. They don't have such a strong impact as they did in the past. These purchasing managers indexes from market are forward-looking ones, but unless we get big surprises, we shouldn't have big moves. At 12:30 GMT, the autumn forecast from the UK government. As we have a new government in the UK, remember Theresa May came into power back in July. They could announce new measures. Will they take the opportunity? Probably not. And some of the data already has been leaked. Let's see if the growth forecasts will stand out for markets, growth, inflation, things like that. If they're better than expected, of course, it's better for the pound. Worse than expected. If they fear the impact of Brexit, it'll be bad for the pound. But the Bank of England has the upper hand, last word. At 1:30, we have figures in the US. We have durable goods orders. That's of course important for investment. That enters the GDP figures. Watch out for the core orders, the ex-defense, ex-air, more important than the headline figures, because sometimes purchases of planes moves the dial too much. We also have new home sales, more important than existing ones, because any sale of a new home triggers wider economic activity around infrastructure, things like that. Oil inventories, just 1 week before OPEC. And in theory, the main event for the day today is the FOMC meeting minutes, an opportunity for the Fed to tell us what's going on in market in its in the next meeting. In theory, again, it's just a recap of the meeting that they had back in November, but it's always edited, revised, redacted until the very last moment, and they are aware that it is a communication tool that can be used to convey a message regarding the next meeting. So that's the event for today. Questions? And now for the upcoming events for this week. What's coming up this week? So first and foremost, tomorrow is Thanksgiving, a nice holiday in the United States, eating turkeys, pumpkins, family get-together, talking about the elections. What this means for markets is lower liquidity, okay? Because Americans are on holiday, it's a big market, of course. And in other markets, traders are taking the opportunity also to take a break. We had quite a few volatile weeks, and we have quite a busy December coming up. So it's a US holiday, and this means lower liquidity. With lower liquidity, we can expect either very calm range trading. For those of you with low spreads, of course, there are opportunities there, boring opportunities, but still opportunities. And on the other hand, as we had in early October, we could have a flash crash. Okay, low chances, of course, of that, but with low liquidity and a sudden big move, we can have a big order, we can have a big move. But we also have data. In the morning, we have German IFO business climate. Germany's #1 think tank has been relatively optimistic of late. Let's see if they continue their optimism. And overnight, Japanese CPI. The Bank of Japan has been failing in its attempt to battle inflation, but well, maybe fresh data will show otherwise. The Bank of Japan last week bought bonds because they had to, because they now have a target of 0% interest rate on the 10-year yield, and with the sell-off in bonds, they had the opportunity to buy bonds and push the yield back down. Okay, and on Friday, the second estimate of UK GDP for the third quarter, the quarter immediately after the EU referendum. And we also have from the US, even though most traders are on holiday, officially it's not a holiday. We have the goods trade balance, shouldn't move the needle too much, should be also low liquidity and an opportunity to, well, either take a break, range trading, or expect the unexpected flash crash as we had in early October. But I believe this time it'll be a bit more calm. Anyway, so we do have significant events from Europe in the next few days. IFO business climate, UK GDP. But remember, it's low liquidity. Okay, so these are the events, the upcoming events we have for now. I see a comment here by Ed. China always does stuff during, China. Anyway, I'll take your comment. Also mentioned it's the lame duck season in the United States. Means President Obama is in his last 2 months of the presidency. Trump has not entered yet the White House, and it's a holiday. It's an opportunity for many countries, including the United States, but also others, including China, as you mentioned, to do something unexpected, to take advantage. So you never know, maybe an interest rate cut, maybe another big declaration. Anyway, trade with care. Also rumors about OPEC. The OPEC meetings in Vienna are going on. They have no US holiday over there, and we might get some leaks, declarations, reports. So I mean, that's sort of a more known unknown, the OPEC meetings, but as you said, China or any other country could also surprise us. Now let's move to the next segment. So now let's talk about the levels. I guess what many of you are waiting for, technical levels for major currency pairs. So let's start with euro dollar. Euro dollar has found a new range, okay? So euro dollar currently between 105.70 and 106.60, 90 pips range. I hope we don't get stuck in this kind of range. We've been stuck in euro dollar ranges for long periods of time. This is where we are at the moment. 105.70 is the cycle low, the lowest since December 2015. Okay, so that's where we are at the moment. And 105.20 is the lowest level since December 2015, but we haven't reached that level. Okay, so moment. So below this level, we have the 104.60. 104.60 is the level seen back in March 2015, and that's the 13-year or 14-year low. If we look up here on the chart, above 106.60, we have 107.10, okay, followed by 108.20. All right, and these are the levels to watch. Above that, we have, of course, 110, which is already out of reach. But just to mention, if we have suddenly a turnaround from Trump, we could, of course, check these levels. On the other side, below 104.60, we have 103 and, of course, parity, but it's a rough road for the euro to go down. Let's continue from the world's most popular currency pair to next one, pound dollar. Pound dollar is at 124.10. We'll have a special focus on that. New levels here to watch. 123.80 is the next level of support, followed by 123, the round level. Below that, let's zoom out just a bit. So we have 121.70 and 121. On the top side, we have 125.15, 125.80, and 126.70. Okay, the ranges in pound dollar are becoming a bit clearer for now. We'll talk about this pair later on. Dollar yen seemed unstoppable. Look at this huge move. This is election night where dollar yen fell to 101 and then made an amazing turnaround. Anyway, we're currently at 111. Okay, a level last seen quite some time ago. We reached 111.40, which is a very nice level of resistance. Look at this one. Really pretty technical behavior. Last seen in May. Okay, was also then the swing high line of resistance, and the pair stopped right here. Unfortunately, we had news about an earthquake in Japan this week. So, and luckily, as far as I know, nobody was hurt or very little damage. But this sort of helped dollar yen stop and not continue higher. If we do continue higher, if the dollar rally resumes, 112 is the next level, followed by 113.80 and 115. To the downside, we have just under 110. I would mention 109, 109.80, and 107.50 remains strong support to the downside. If we have a big collapse there, 105.50 is the next level to watch. Dollar CAD currently 134.40. It's caught between the dollar strength on one hand, the Canadian dollar weakness from domestic data, and oil prices. So on the other hand, so if it weren't for oil prices, we would have seen the Canadian dollar weaken a lot more. That means dollar CAD pushing much higher. Anyway, regarding technical lines, it's 133.80 to the downside, followed by 132.65 and much lower 130. To the top side, 134.80, 135.60, and 136.35. Okay, currently looking for a new direction, but the trend is higher. The Canadian dollar is weakening. Aussie dollar weakened quite a bit. We had long periods of frustrating range trading with the Aussie dollar. Currently 74.40, which I still see as a line of resistance, followed by 75.20, 75.80, 76.50, and 77. Quite busy up there because we had narrow range trading for a very long time. On the downside, 73.75 is not as strong as it used to be. The round number of 73 is already stronger support. And following below, we have 72.50 and 71.75. And Kiwi dollar currently at 70.60. We already dropped below the 70 level to 69.80, even closer, 69.50, and then 68.80. On the top side, we have 71, 71.40, 71.80, and then a leap to 72.65. The Kiwi collapsed quite a bit on Trump's election. And we'll complete the major pairs with dollar Swiss. Dollar Swiss here at 101.20, a level not seen since back in February, so quite a level here. The next level of resistance is the recent high of 101.35, followed by 101.70, 102.20, 102.50, and 103.30. On the downside, we have 1 and 50, and then parity, of course. Parity remains a strong line, followed by 99, 98.50, and 98. So dollar Swiss mostly reflects the strength of the US dollar, and well, the Swiss National Bank intervenes, but probably not too much. Okay, so this concludes our major pairs for now. Let's continue with the minors. So now let's talk about technical levels, support and resistance for the crosses. So we'll begin with Euro Swiss. We ended our majors with dollar Swiss. Now we'll continue to Euro Swiss. We've seen here how this pair fell all the way to 106.85. Maybe it got some support, maybe it got some help there from the Swiss National Bank to pick it off the ground. I used to see 107.50, 107.60 as a line in the sand, but they let it fall even lower, and now I guess they're intervening to weaken the franc. This breather that the dollar is taking is helping them. Anyway, 107.60, 107.80, 108.20, 108.50, and 109 are levels to watch. But remember, this cross, Euro Swiss, suffers quite significant intervention by the Swiss National Bank to weaken the yen. That means pushing Euro Swiss higher. 108 to 110 is the range we got used to. Euro pound, of course, much more action here. The Brexit pair, if you wish, 85 is some kind of support. Even lower, 84.20, 83.35, 82.60, and 82.20. On the top side, we have 85.90, 86.50, 87.80, and 88. Quite busy over there. If we all in all, we went above 90 and then fell back down. So this is zooming in on the hourly chart. Currently, the range is from between 85 and 85.90, almost 86 over there, okay, and 86.50. These are the levels to watch. I think this cross will remain relatively active because the euro and the pound are not moving in tandem against the US dollar. Euro yen currently at almost at 118, 118.15 is the next level of resistance. On the downside, we have 117, 116.25, 114.50, and 113.80. Yeah, these are, let's zoom out just a bit to see the levels above. Not that much higher. Yeah, not too much above there, because these are levels that in this area that the pair didn't trade for a long time. Pound yen, the dragon. The dragon is roaring once again. The pound has recovered. We'll talk about the pound soon. And the yen hasn't weakened. Well, the yen has weakened. Sorry. So we have both forces, stable pound and weaker yen, pushing this cross higher. Currently 137.75. The top side we have 139, 139.80, just under 140, and above that 143. On to the downside we have 137.50, which is close to where we are now, just above support. 135, which served as support beforehand. 132.50, which was resistance in September. 129 and 126.16. Okay, and now to complete the segment with crosses, let's just jump to oil prices. As you can see here, they're trending higher. We fell to support just around there, 42, 42.50, and then bounced back. High hopes about OPEC, 49. You already touched this level, and it serves as a line of resistance. Above there, we have the double top there of 51.80. Okay, these are big levels to watch. On the downside, 46.50, 44.40, 42.50, and under the 40 level, we have 39 or 38.80. Okay, so we're gonna have a lot of movement. I'm mentioning oil prices, currently WTI crude oil at 48 in the higher end of the range, because there is a correlation between higher oil prices and a weaker US dollar, and sort of an inverse correlation. Okay, so this concludes our segment about crosses. And now our currency of the week, pound dollar. You can see here Donald Trump and Nigel Farage, photo taken about a week ago in the golden elevator of the Trump Tower. Trump said, "Call me Mr. Brexit." And well, Brexit was a shocker. Trump was a shocker. Both are friends, and it went in the same direction. Trump even suggested that Nigel Farage should be the UK ambassador to the United States. The British Foreign Office replied with, "The position is not vacant." Anyway, our currency of the week. Let's focus a bit about the UK, because today we have the autumn statement, which we heard about because this is Chancellor of the Exchequer Philip Hammond, the Treasury Secretary, if you wish, in the United Kingdom. He said the United Kingdom economy, well, we know that it's doing better than expected. It did not collapse following Brexit. We'll have fresh GDP numbers on Friday. The weaker pound does help a bit in, well, not only pushing inflation higher, but also helping exports, and consumers continue buying. The future looks uncertain. This uncertainty did not manifest yet into any kind of economic slump, but perhaps we've reached a top in employment. The future does look quite uncertain. Currently, the autumn statement, as we have a new government, it's an opportunity to make a success out of Brexit, as Prime Minister Theresa May said, but it might be missed, okay? Because what would be a success? Because it's a new government, they're unshackled. They don't have to use the chains of the austerity policy that George Osborne enacted, the previous chancellor, and they can provide some kind of fiscal stimulus, some kind of investment, show that Britain can stand on its own as it's about to leave the European Union. But as we've heard from weekend interviews by Philip Hammond, they'll probably make only very little changes in this autumn statement, this mini budget, and I believe we'll have well, this autumn statement might move markets in terms of new forecasts, but we won't have earth-shattering comments. Okay, this might weaken the pound. Regarding Brexit, this is a picture of Prime Minister Theresa May. One of the reasons that the pound has strengthened is that a few weeks ago we had Super Thursday in the UK. The High Court decided that Parliament must rule on Article 50. Only the UK Parliament can officially approve the exit out of the European Union, not the government on its own. With its royal prerogative, the government immediately appealed to the Supreme Court, which will hear the case in December. Parliament will probably approve Brexit because even if members of Parliament lean towards remain, do not want to leave, they will probably respect the will of the people, especially those in constituencies that voted to leave. So Article 50 is still planned to be triggered in March. That means a 2-year period that will end in March 2019, and then the UK will be out. And that will leave around 2 years for negotiations. The best deal for markets is a Norway-style deal, also known as soft Brexit. Okay, a deal in which basically immigration remains free, and also the UK has access to the single market. Basically the same situation as we have now without official membership. That's what Norway has. But Prime Minister Theresa May leans towards limiting immigration, and some of her cabinet members want to allow for foregoing the single market, and they want a hard Brexit. There's huge uncertainty about that, and it seems, according to various reports, that the government does not have a clear plan about it. Okay, so all this uncertainty weighs on the pound. However, well, there's also uncertainty on the other side of the globe. Trump also there. He wants to enact fiscal stimulus, which would lift the US growth prospects, and also lift global growth, right? More demand from the United States. But going against trade, breaking trade deals or things like that could hurt the world, could hurt global growth. Some hope for a quick US-UK deal, okay, because the UK needs fresh trading partners, and well, also the US wants, I guess, not to break, wants bilateral deals. That's what Trump said. But in the week, pound dollar could, of course, benefit British exports to the United States, but still, most of the trade is with Europe. What makes the pound dollar more stable than, for instance, euro pound or things like that, is not so much. There's not so much monetary policy divergence. Okay, so if the Bank of Japan is easing, if the European Central Bank is about to add more QE, probably, okay. In the UK, the Bank of England moved to a neutral stance. They moved because of the weakening of the exchange rate, because of higher inflation. There's not so much divergence. It's they changed also on that Super Thursday from from dovish to neutral, not expecting to cut rates, not to raise them either, watching the exchange rate, among other things. So the Bank of England is neutral. That's what keeps pound dollar more stable. Remember that the pound fell already a lot following Brexit. Then we had a second round of falls in October, and but it didn't react quite badly to the US elections. Okay, of course we had high volatility, but nothing extraordinary. So if we compare both countries, the Fed is set to raise rates, the Fed is hawkish, and the Bank of England is neutral, not dovish, at least in 2016. In 2017, of course, huge uncertainty regarding Trump's policies and huge uncertainty regarding the Brexit negotiations. Okay. Let's conclude this this part with the charts. Well, the pound dollar chart. Repeat for those watching the video. Currently, pound dollar. This is the big fall. This is the Brexit fall from almost 150 to a range between 128 and 135 that lasted for quite some time. This range is not relevant anymore. Then we had another fall. We had this flash crash right here. What was the exact date? Let me get that for you. That was October 7th. And then we had the pair stabilizing. So the levels to watch here on the very top side, the first post-Brexit low, 127.90, 127, 125.50, 125.10, 123.80, 123, 121.70, 121, and 120, of course, is a round number. I see here quite a few questions, so let's try to answer them. From Ed. It says Trump gathered all heads of media and slaughtered them with abusive language, telling them they were all liars. They don't show him in good photos either. We don't need Europe. They need us. US and the UK economy technically grown just above Germany, but they won't tell you that. Yeah, I mean, in all Western countries, global growth is okay, but not impressive. China called him a clown, but now they have shame on their faces. Trump's good to rock the boat establishment that's been behind the scenes for too long. Yeah. When we really don't know about Trump. Many people voted him as anti-establishment, but his nominations, a few of them are really very anti-establishment, like Steve Bannon, a known white supremacist, really extreme person. On the other hand, we had very establishment nominations like Reince Priebus. There were talks about nominating Goldman Sachs, a former Goldman Sachs executive, as Treasury Secretary, but we don't know who that's going to be. I don't know. I mean, some people voted for Trump as anti-establishment, drain the swamp. We'll have to see what he does. He wants his children to be involved in the presidency, so that's a bit of nepotism. He might bring politicians from the swamp. He might bring bankers from the swamp, and he might bring real outsiders. I guess it'll be a mix of everything. China, if Trump labels China a currency manipulator, what does that actually mean? We don't really know. Anyway, there's lots of uncertainty. He gave yesterday an interview to the New York Times in which the headlines were that he was sort of emphatic to Hillary Clinton, which is, of course, a political thing. It doesn't impact markets. And, well, I don't think we had anything market moving over there. We did have a video from him about breaking down TPP. TPP is a trade agreement in the Pacific region, which excludes China. So if China is the adversary, going forward with TPP with Japan, Australia, Canada, Mexico, Chile, and a few other countries, would sort of hit China. But on the other hand, it's not a classic trade agreement. It doesn't lower tariffs. It mostly deals with intellectual property, and had many issues anyway. So maybe breaking it down is not such a bad idea. We'll have to see what he does, especially on his first 100 days. I guess at the end of April, the beginning of May, and the spring we'll have, after 100 days, we'll get a better notion about what's going on. Yeah, we need more flash crashes. Goldman Sachs always has the foot in the door. Yeah, Mario Draghi and Mark Carney worked for Goldman Sachs. And of course, they're not the only ones in positions of influence. Okay. And now let's do the preview for next week's events. Next week, well, begins easy after the Thanksgiving holiday. No big releases. But on Tuesday, we already get lots of key figures. We get fresh inflation figures from Spain and Germany. Those are fresh for November, the preliminary ones. We have the second release of the US GDP for Q3. That'll be interesting. The revisions are quite significant in the United States. We also have consumer confidence in the United States, the CB, consumer confidence, which moves markets. Things get even busier on Wednesday. We have officially the OPEC meetings, okay, which of course involve, we'll get details, we'll get reports, we'll get leaks towards the event, but this is when decisions are supposed to be taken. Any declarations, communiques coming out of there. Inflation figures, again, fresh from the Eurozone for November, following the German and Spanish ones. The ADP non-farm payrolls, the big hint towards the NFP. On Wednesday, Canadian GDP for those trading the Canadian dollar. Remember, Canadian figures have been weaker, and Canadian dollar is pumped up thanks to oil prices. We also have the Fed's inflation figure, the core PCE price index in the US, and oil inventories. On Thursday, we have another hint for the non-farm payrolls from the US ISM manufacturing PMI. Also of note, the Chinese PMIs, important for the Australian dollar and also for other currencies. And on Friday, of course, the US non-farm payrolls, the last one before the expected rate hike. Only a terrible report can derail the Fed at this point. It'll be interesting to see. I guess we'll have, it'll be interesting to see wages, because last time in the report for October, wages jumped by 2.8%, which is really, really great. Okay, and we also have the Canadian jobs report. So quite a busy week. It's the turn of the month. It's the week beginning on November 28th, ending December 2nd, and sort of providing also a big warm-up. I mean, these events stand on their own, but they also, for euro dollar, it's big because it's before the ECB and the Fed meetings. Okay, so that's it for the preview. Now let's wrap up the show. This is the wrap up for the live market open for November 23rd. It's the week of Thanksgiving. Markets are a bit more mixed. The US dollar is taking yet another breather. We've seen a few breathers and then further advances. So this is one of those breathers now. This one might last a bit longer because of Thanksgiving. There's uncertainty about OPEC, uncertainty about the Trump transition. Which kind of fiscal stimulus will we have? But there's much less uncertainty for change regarding the Fed, because the Fed is nearing a hike. Today we have the FOMC meeting minutes that should provide yet another nail, yet another, well, cementing. But we heard already from Yellen that raising rates will be appropriate relatively soon. Okay. On the other hand of the Atlantic, on the other side of the Atlantic, Mario Draghi sounded quite dovish. Okay, this weighs on euro-dollar, but euro-dollar refuses to really collapse. Okay, it fell quite a bit. In terms of key data points worth mentioning, inflation in the US has been, well, slowing down, maybe also thanks to a stronger dollar, but housing looks great on all fronts. Australian dollar is showing weakness. One of the reasons is a weak jobs report last week. The pound, we had a special segment today on the pound, is relatively stable. Figures there have been mostly positive. Today on the agenda, the biggest event is the Fed meeting minutes at the end of the day. Remember, this is a revised document. That means it's not as old as you may think. And also before that, we have durable goods orders, an important figure as well. Okay, and the autumn forecast from the UK, I forgot to mention, probably no surprises. Watch out, don't expect big plans, but do expect fresh forecasts regarding growth. That might impact the British pound. I don't have any bias towards where these growth forecasts will go in terms of moving markets. And, well, also home sales and crude oil inventories are worth watching. Let's take a quick look at the charts in this wrap up. So euro dollar currently is in range between 105.70 and 106.60, stabilizing after those big falls. Above that, 107.10 and 105.20. Pound dollar leaning lower finding their support 123.80. It's beginning to see here a double bottom on the hourly chart. Resistance 125.10. Lower support 123. Dollar yen took a pause as well. 111 is the current level, 111.40, and 112 on the downside, 109.80. Dollar CAD 134.50. At the moment, resistance 134.80, support 133.80. Watch out for OPEC regarding CAD. Aussie dollar 74.30. Recovering from the lows, 73.75 support, 74.40 resistance, followed by 75.20, and to the downside 73. Kiwi, the Kiwi dollar at 70.57 at the moment, resistance 71, support just under 70 at 69.80. Okay. So these are main currency pairs. Currently, euro dollar is a bit sliding this morning at the European Open, but it didn't go too far. Okay, so that's our show for today. Thank you everybody for coming, for watching. As usual, thank you FX Street. You can see video clips from this show, the various segments we did here on FX Street, and then also on Forex Crunch. I wish everybody a safe and successful trading day. If you're in the US, enjoy the Thanksgiving holiday, and see you soon. So that's it. Thank you for today. See you next week. Goodbye.